Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. If you're new around here, make sure you guys hit that subscribe button, and more importantly, right next to it, there's a little bell that'll give you an indication when I come on live. Why is that important? Because this is scheduled for 8:30. The idea here is, folks, is that when I spot a trade or I find an opportunity, I'm going to pop on here to let you guys know about it, and we'll walk through it as if it were live. And we aren't using my trades as recommendations. Keep that in mind. What I am doing is using my trades as learning examples, and we've got a really good one today. So make sure you guys are sticking around for that. Finally, smash that like button before you go, because that really does feed those bots to run out and find somebody just like you. All right. Oh, yeah. And if you have any questions, comments, or anything else, throw it over in the comment section. I'm keeping an eye on that over there. All right. So economic data across the pond. What do we got going on? Really not a whole lot today, but we did hear, we did get something in, CBI industrial production numbers coming in lower than expected at 9, expected to be 17. I also got in a little bit early yesterday. We got a couple economic data points, and one of them was the crude oil inventory numbers. That was expected to be a build of 2.1 million, 2,100,000 barrels. It was a drawdown of 400,000 barrels. So seeing a little bit of weakness here, as you can see today on that data point, possibly. I think that's going to be more weakness on these industrial production numbers and the Philly Fed numbers that we're getting. It's not necessarily the crude oil inventories building, all right, or drawing down, or, drawing down would cause us a bullish move. A build would cause us a bearish move, because a build is those supplies building up. Now, we saw a drawdown here. Now, is that due to demand or some of these other levering factors? I think that really we have gotten that production back up to scale, and we are turning that into different buckets. That's what we'll see a lot of times when we don't see the demand. We see the oil coming in, and then when we see these distillate factor, or these factories breaking that down into gasoline, airplane fuel, and polypropylenes and stuff like that, that goes into different buckets, and it makes it look like it's disappeared or there's demand there, but actually it's just kind of filling up other buckets around the way. Sorry. So let me share this screen. I got to make sure I got the right one. Forgot to add that on there. Let's throw that there, and we are good to go. Crude oil right there, finally seeing some weakness based on these economic data points we're getting today. We got the CBI, like I said, industrial order expectations 9, expected to be 17. Philly Fed manufacturing, it came in at 23.8, expected to be 25.1, so a miss there. And unemployment claims in line with expectations. Some people will call it a little bit better than what was expected. 290,000 claims, expected to be 298,000 claims on that number there. All right, so that's about it for the economic data. We can see crude oil starting to see a little bit of weakness. I think it's on those manufacturing numbers, folks. That's going to be the major demand driver of crude oil. We all like to talk about us driving around, but that's really not the major use of that crude oil, I guess, is what I'm trying to say here. Bonds are bottoming out right here at the point of control. Are we going to continue to see higher interest rates across the board? I think we're going to see these slowdowns happening. Everybody's talking about the Fed has got to go after this inflation. Well, I don't think it's transitory, for one. As soon as we're seeing wage inflation and shipping inflation, those things are kind of hard to reel back in, especially the wage inflation, folks. Once you get a raise, you're not getting that taken back unless you get fired, I guess. But right here, we've got bonds bottoming out. I think we're going to hold on to this. We might even start to revisit a little bit of a bullish move and see interest rates suppressed just a little bit here going forward if we continue to see these manufacturing numbers weaken. It's not going to be an inflationary mandate at that point, folks. And then that's going to be the hardest thing for these Fed governors to really grapple, is when we have inflation rising and the economy stalling, that they don't have any tools in their quiver to combat this. And that is something we could really see as a headwind going forward. Gold futures are kind of stuck right here at the point of control. Again, I don't know if we're going to see that 1800, but I would say risk is to the upside. Risk assessment is to the upside in gold futures as opposed to the downside. Now, Bitcoin, it's starting to rally off of some of these inflationary fears. I guess the younger generation of investor is a little bit more savvy than some of these older guys. They're not following suit with this inflationary bite on gold. So I would expect gold to get a little bit of push to the upside. VIX, again, seems to be sliding as folks are going to be thinking, all right, if we aren't going to raise interest rates, that's good for equities, even though it's a bad economy. So you're going to have to get that into your head, folks, that that's going to be a situation that the equities might start rallying on bad economic data because they're expecting lower interest rates, okay? We've got Dow Jones, it's off just a little bit, but for the most part, we are in positive territory. E-mini S&Ps, something I wanted to zoom in on here is the futures for E-mini S&Ps. We've gotten a bit of a topping pattern yesterday, no confirmation today. We would have to finish below this wick. At this point, risk assessment really focuses to the is pretty neutral. As you can see right now, we're starting to consolidate here, which is not unheard of when you get a nice big rally that we start consolidating across there. And that's what we're starting to see in the market. So again, looks pretty benign at this point. But what I wanted to talk about really is this trade, and I've gotten it broken down into the day trade 15-minute charts because I did an earnings trade on this, folks. And I am working to get out of this trade, not quite there yet, but I usually talk about in my earnings videos. Now, yesterday I tried something a little bit of a pivot, and I'm not going to do that again, folks, for you. Well, I wanted to get in here a little bit early, just test it out and throw a trade on. Now, for earnings, I always talk about one of my guidelines is to wait for the end of the day. You're doing this in the last 2 hours of the day and possibly even, I would suggest, the last hour of the day. Well, yesterday I decided to throw this on there a little bit early just to have a different perspective on this. And, you know, when you do these things, it makes you realize, you know what? You actually are onto something here. That really is not a great idea to put an earnings trade on very early on in the day. And what I did is I had gone into the October, sold the 39 puts this morning, yesterday morning, early on. Like I said, I usually come on, talk about it, and tell you when I'm going to do it, when, where, and why. Well, this had high volatility. I do expect the volatility to come out after that earnings, which we're starting to see. So I do have that working in my favor. But you can see when you put these trades on earlier on in the day, you are beholden to the rest of the day. It's not really getting that snapshot at the end of the day for your move based on what the earnings are. And that was a bit of a mistake. As you can see, we sold off about $1 during the time that I had put this on. So those October 39 puts, I sold for 31 cents. 38 cents. I'm trying to get out for 31 cents right now. That popped up there. I was a little bit lower thinking I was going to be able to get out for about a nickel if we got a little bit of a pop back up to the point of control. Well, the market really failed and it happened just like that. So I'm working at 31 bid in those October 39 puts to get out. So hopefully we can get a little bit of a push to the upside here. Otherwise, I'm going to be holding on to this until tomorrow and possibly take Las Vegas Sands into my portfolio as a long trade. And then we'll start staying mechanical, look at covered calls, things like that to lower our overall cost basis on a trade that we have a stock that we've purchased. Okay, so that's the game plan for Las Vegas Sands. They came out with earnings. Yeah, they missed on earnings, and maybe some folks are thinking that they should get beat up for it. Well, I think it's already priced in because really the miss is due to Macau not opening up and some of the regulations in China. So really, even without Macau, Las Vegas Sands is priced to survive with only Las Vegas. Okay, so that's what I've got. That's part of my bit of a soapbox. I would probably lean towards waiting for some Caesars. I think that they may have figured this whole pandemic situation out a little bit better than some of these folks that are involved in Macau. All right, that's all I got for you guys. Looking to get out of that trade right now. And otherwise, I'm going to be talking about Conocophillips today based on some of what we're seeing in the overall environment. How's that going to affect this stock? It's going to be a pop or drop, I think. So we'll talk about why we set up a strategy around an underlying. We have no idea where it's going to go. All right. So we'll talk about that now to best set that up. Best practices for you. All right. If you can't take that, take it easy.